All right, so I've spoken to over 1,500 investors one-on-one, and this comes up a lot. It's really about the time value of money. How does the time value of money work? If I invest now versus invest later, if I get some money back in a deal early versus not getting any until the very end, how does that affect my returns, and how should I approach that as an investor? Some investments have the same investment return over the 5 to 7 year period, but one is way better because you get a lot of the money sooner. And I can't say how many investors I've had get caught up on just deal structure, and if a deal looks a little different, they're like, wait, hold on, I don't understand how this works. So we're gonna jump into it. This is gonna be really valuable for you when it comes to your investments. I'm gonna go over this in 3 easy steps and share a quote for you at the end. Let's jump in. All right, well, my name is Bronson Hill. I'm the CEO of Bronson Equity. We do deals like this. We also do oil and gas deals, car wash, ATMs, other sorts of alternative assets. I'm not an investment advisor, so get your own opinions. These are just my thoughts. So what is the time value of money? Well, it has to do with if you have money in your pocket today, it's more valuable than money in 5 years or in 10 years. You'd probably agree with that, right? Maybe you nod your head. Okay, I can see you nodding your head. I wish I could see you nodding your head. But if you have money in the future, it's not as beneficial as today. Why is that? Well, money today can be invested. It can be used for other things. Now, it's interesting. There's another dynamic to this. Inflation is eroding the value of your dollars. So dollars in the future will be worth less regardless, right? And also you can get an investment return on them, which will help you fight inflation. So the time value of money is just saying when you get paid in a deal, it's really important. If you get paid back sooner, you can go reinvest. That's a very simple principle, but there are deals, and I'm gonna get into an example here that I think you'll find very interesting, where a lot of people they get kind of confused by it. So you don't want your money sitting around. You want it working for you. And like we said, money will be worth less in the future because of inflation. My friend Mark Moss says there are 3 certainties in life: death, taxes, and inflation. It's just a certainty. It's going to happen. You're going to lose the value of your purchasing power. And so being invested in real assets is incredibly valuable. So I'm going to explain how this works here. We're going to go over a multifamily deal, and we're going to compare an ATM deal and a multifamily deal. So this comes from my book, Fire Yourself, which is right behind me. It just came out. It's an Amazon bestseller already, so we're super excited about it. But this is a multifamily deal. Typically, you'll have a flow of some cash along the way. You invest. After a period of time, there'll be some cash that comes in. You can see how the scale is kind of rising on the chart there. And at the end, you'll get a big lump sum at the end. Typically, most of your return plus your principal back. So you might get 70 to 80% of the money that you invested at the very end when you sell. You'll get your principal back at that time, and you'll get the gain. Hopefully, if the deal goes well, you'll get the deal back at that time. So that's kind of how that works. Now you look at the second chart here. This is an ATM fund. This is the ATM fund that we do, kind of similar to this type of thing where you see it's just a flat line. You're basically getting paid pretty quickly. After 3 or 4 months, you start getting a payment, and then every single month you're getting a preferred return payment, and at the end it just ceases to pay. There's no big lump sum at the end. And so people look and they say, oh, well, these 2 deals, if they're comparable, which one is better? Or if the ATM fund is a 7-year deal and it's about the same return as the multifamily deal, well, the multifamily deal must be better because it's a shorter return, right? Well, the answer is maybe, and no. So with the ATM fund, when you get paid back is very important. So it's interesting about the ATM fund. If you look at the total return, typically around 11, 12%, right? It's not that high as far as an average annual return. You take the total return over 7 years, you divide it up, it's only 11, 12%. But again, when you get paid back is very important. If you get paid back more money early, and like this deal with the preferred return schedule, again, it's not a guarantee, but the schedule pays back around, in about 2 years, about half of the funds invested, right? So if that's the case, then you can actually take those funds and you can go reinvest them in another deal. Now this term is called internal rate of return, or IRR. And that's why I think when it comes to looking at a deal, it's not the average annual return or total deal return or equity multiple. It's the IRR, which is the most important number. Well, why is that? It's because if your money's working, how hard is it working for you? If it's not working, then you can actually have the money back and you can go reinvest it, right? So this is also illustrated in the thought of having 2 similar deals. Let's say I've got 2 multifamily deals. They're both 5-year deals. There are 2 equity multiples, so 100K becomes 200K in 5 years. Okay, you tracking with me? Okay, great. So you've got the same deals, right? Now the first deal, you get nothing back. It's some sort of development deal, whatever. You don't get anything back for 5 years, or at which time you double your money and get your principal back, right? So you get nothing for 5 years, and then 100K invested becomes 200K. You've doubled your money, including your principal, right? So that's pretty awesome. That's great. Well, what about another deal that you got in year one, you got 90% of your capital back and your principal back. And so you had almost most of your money back, and you only had 10K that you're waiting on for the remaining 4 years, right? Are those deals the same? Well, overall, yes, they are the same. They both are a 2 equity multiple. They both last 5 years. But we know if you look at it, if in 1 year you had $190,000 back in your pocket, you can go reinvest that. And then so the second deal is way better, right? So that's, again, how hard your money is working for you. And that's the number internal rate of return. So I'm going to share why cash flow can help with this, right? So cash flow helps. Cash flow does 2 things. One, it helps to reduce your basis in a deal. So if you're getting paid back early on, I'd rather much rather, I've become more strong on this, much rather have cash flow as soon as possible, as quickly as possible, right away, than to make tons of money someday, down the road, because it's all speculative. It may be there, it may not be there, and I can't retire or I can't cover expenses on money that may come someday. But monthly, quarterly checks, distributions, that helps me pay expenses, right? It's super valuable. So that's kind of how that works in a deal. And so you're able to reinvest. It also lowers your risk, because if you're starting to get some of your money back and something happens with a deal or it fails or whatever, well, you've already gotten a portion of your money back. You've already got a portion of your capital back. So having cash flow deals are super awesome. We talked about the ATM fund. It's become my favorite cash flow deal. Projected, again, this is just projections. It's around a 19% IRR. It's been predictable. Doesn't mean it couldn't miss in the future, but it's become my favorite cash flow investment. And cash flow each month, it reduces the amount of money invested, especially if you're getting some of your principal back along the way. Just in summary, get your funds working now. If you're not in real assets, get in real assets. When you look at deals, look at total return. Sometimes there is if one of your goals is, hey, I just want to appreciate as much as I can. But if you're looking to, like my book says up here, fire yourself, right? Then you're going to have to start developing cash flow. Because as Warren Buffett says, unless you learn how to make money while you sleep, you'll work until you die. Unless you learn how to get cash flow in your life, you're just simply going to keep having to grind and work away. And hopefully some of that money will be there someday that you invested. But the cash flow is really what is transformational. So anyway, you can check out my book. It's at Amazon.com. It's become a bestseller. Really excited about it. But this is a really cool quote. This comes from Benjamin Graham, who was actually Warren Buffett's mentor. So you got to listen to this guy. He says, the best time to invest is when you have money. This is because history suggests that it is not timing which matters, but time. So time in the market or time invested is more important than timing the market, right? I'm not talking about stocks, I'm just talking about putting your money to work for you is better than just trying to wait for this perfect time. So also, if you're interested in working with your retirement accounts, there's ways you can invest with retirement accounts into real assets. I compare and say why I think it's beneficial or what are the risks of it or how is it structured. Check it out up here and it asks, are alternative assets the best retirement plan? And then if you haven't checked out our investment club, you're not hearing about some of these awesome deals we're doing in the multifamily, oil and gas, ATM machine, and car wash space. You can check that out in the link below or go to BronsonEquity.com. Appreciate you taking the time to educate yourself. It really, truly it inspires me a lot because this is how we get better. Is we watch videos like this, we learn. So please feel free to like, share, and subscribe. And I appreciate all the support. We look forward to seeing you on the next video.